All right, good morning, ladies and gentlemen. It's Wednesday, July 19th, 2023, and I'm back with another edition of the Wednesday Live Show. I was off last week because I had some stuff going on. I had some people working around the house here, and it's impossible to do a show when I have strangers tromping around in my house. But anyway, it's been a wild couple of weeks. Wild market environment, tell you the truth. In some respects, and in other respects, it's been really super dull, sort of on an intraday basis. Now, yesterday was pretty exciting. Big long range day up. Um, just incredible. We've actually seen a couple of trending days this week, but prior to that, it seemed like the market was kind of boring. Now, individual stocks have been a different story, but the market itself is kind of in the middle of the summer doldrums. We're just now getting into earnings season, like sort of the thick of earnings season. I think Tesla and Netflix are coming out with earnings, and so, things may start to pick up, but typically July and August are pretty dull months, honestly. In all the years I've been doing this, July and August, it seems like everybody can't be on vacation, but it seems like for some reason the participation is a lot lower, and for whatever reason, the volume really seems like it sort of dries up in July and August, and then things typically pick up after Labor Day. But this market environment that we're in is pretty interesting. So I got a chart of the S&P up here, and I looked at a bunch of different time frames. Obviously, I've been looking at all sorts of charts, but this particular view I thought would be a good one to start with, starting back here in March. And you can see the last. It's been March since we've actually had any sort of sell-off in the market, and it's pretty incredible. So I saw a statistic yesterday that said that the S&P, I believe it was the S&P. Yeah, it was the S&P. Seven stocks have accounted for, the majority of the gain year to date, and the other 493 stocks in the S&P are like up 4%, but the S&P is up like what, like 15, 16%, something like that. Don't quote me on that, but anyway, the market's just been on a tear this year. It actually started rallying at the beginning of the year, and there've been a couple little pullbacks here and there, but as you can see, just recently, starting in June, right, when I talk about the summer doldrums, this is kind of interesting because April and May were basically just sideways markets, right? I mean, for two entire months, there was literally nothing happening. You can see, the very beginning of April here, S&P was just over 4,100, and I suppose over those 2 months, it was up a little bit. But the last day of May, so it was basically kind of a sideways pattern. You had a couple of tests, actually three little pokes down here at the 50-day. So the last significant sell-off we had was back in March. But you can see at the beginning of June, it sort of went into like this bull market pattern where it just pops up, consolidate a little bit, sort of a parabolic move, and a little bit of a dip here, right? And then same sort of thing, just I wouldn't even call this a dip right here. I suppose it was, a little bit. But look at this. We're getting another one of these sort of parabolic rises right now, like we had towards the beginning of June. And this thing's getting long in the tooth. And so let me pull this chart up here. It's funny because, well, it's not funny, but it's interesting because, as you recall, I was doing a show back here. There we go. I was doing the show back here in June, like somewhere around here, when we noted that the RSI, the RSI got extremely overbought. Let's see, it got up. It looks like it got up to about, geez, like 76 roughly. At this point right here, and then you can see, you can see in the upper panel here that we got that little dip, I guess that's what you'd call a dip. I don't remember percentage-wise what it was, but look at the RSI now. It's definitely getting stretched. So we're in the same sort of boat that we were in back here. What's surprising about this, and so let me fix my chart again. So just keep that in mind. I'm gonna get rid of that bottom panel there because I like to look at the price, but here we are again with an extremely overbought RSI, and so as much fun as this current rally is, and as much as everybody's excited, and it's a bull market, and the all-time highs are within sight, and all that, in the very short term. Let me try and fix this. Boy, these stock charts. It's like every week they change something with the stock charts, and so in order to let's see what I'm trying to do here. Oh, there we go. Yeah, it's like every week they change something in here. And sometimes it's for the better and sometimes it's not. The thing that drives me crazy is my mouse scroller no longer zooms the chart in and out. So but most of the other things they've made are improvements. Anyway, this rally's getting long in the tooth. That RSI is back in the old days, the RSI'd get up to like 70, and then it was time to get cautious, and you'd get a pullback. And over the past, X amount of years, I've been doing this for so long, it's when I say the last few years, I might actually be thinking 5, 6 years back. But, the RSI on the daily time frame can tend to really get buried. I've seen it, in the 80s, and there was one time I can remember. I think the RSI was almost 90. But anyway, yeah, it's this current rally is getting a little bit long in the tooth, right? So, as you guys recall, not that long ago, and even back over in here, around a few months back, you recall me saying that against most of the fundamental backdrop and everything that you would think that this pattern looked like it was forming a big sort of giant cup. And just looking at the chart objectively, and if you've been watching all along, you'll remember me mention this a few times, that that if I didn't know what this was, if I was just looking at a chart or whatever, I would say that it was forming a big giant cup. And so it kind of and I back over here in April and May, and amazingly enough, I would have never guessed that we'd have this sort of kind of summer rally, especially just based on everything we know. And so go back to the pandemic here. I always like to have the pandemic high on the chart, just to get sort of, especially on individual stock charts, because that was sort of, well, hopefully it was a once in a lifetime sort of anomaly, right? I mean, that's what I hope. But in order to get a really good perspective, and typically I'll pull up a weekly chart to zoom back. Pretty soon I won't be able to get the pandemic on some of these charts because it's going to be, so far back. But anyway, yeah, I mean, the big question is here is whether we're going to get an all-time high here. Whether this thing's gunning for the all-time high, or I would almost certainly say that there's a pullback prior to that. I can't imagine this trajectory being sustained, but hey, you never know. The other thing to keep in mind is that the NASDAQ 100, if I'm not mistaken, it's as of this coming Monday. Look at that. I mean, just since the beginning of the year. And this is the most interesting thing about the NASDAQ to me, is that at the very beginning of 2023, it was right down banging on the lows there. I mean, it was right around the October low. So on the S&P, go back to the S&P real quick and look at where the October low was, and then look at how, it kind of rallied, and the beginning of the year was fairly significantly off the lows. But with the Qs at the beginning of 2023, it was basically, just hovering right at the lows, the same October lows. And then at the beginning of the year, I guess there was a lot of money on the sidelines, or cash that needed to be deployed, or what have you, and just went on a straight up tear. Real nice, orderly, pullback with that perfect trend line break and all that, and just higher. But I mean, now, geez, it's going parabolic, and so of course, um, we're kind of in another little mania here when it comes to AI, right? Everybody's talking about AI, and so yesterday Microsoft came out with some news about their AI, and the stock rallied 6%. And so I saw another statistic yesterday that said something like it was Microsoft and Nvidia added more market cap yesterday than, like, a whole bunch of, like, Disney and a whole bunch of other, giant companies all put together. And so, like, the market cap of Microsoft and Nvidia is just insane. I mean, it's just incredible. So I should probably note these statistics. Like, I see so much stuff, in my travels around the internet. I see so many statistics and different interesting sort of quips in that they stick in my head for a day, but I always neglect to actually save the actual data so that I can bring it. But maybe I need to start making notes of that. But it was incredible. I mean, like $100 and something billion of market cap was added to Microsoft and Nvidia yesterday, which is larger than the market cap of a whole bunch of, big giant brand name companies that you've heard of. And so, it goes back to the whole thing. So now there's 7 stocks that basically Facebook, Apple, Amazon, Microsoft, Google, Netflix, and I guess maybe Tesla, or I'm sorry, not Tesla, Nvidia. So I'm not sure how relevant Tesla is, um, but yeah, Nvidia is one of the big 7. So Um. Anyway, the Qs here, boy. I mean, it seems like they've pushed up into resistance here, and these prior highs here. This is kind of interesting. The highs from back in 2021. There was a lot of zigzagging around up here, and of course this is Nasdaq 100, not the actual Nasdaq. But boy, there was a lot of sort of zigzagging around, poking at highs here. And so at this point right here, you can see that the price is basically back up into, this big sort of resistance chop zone. IWM is always an interesting one to look at, because go I might as well start back at the pandemic here. So, the Russell 2000 back in 2021, we spent a lot of, I spent a lot of time drawing a big rectangle around this price action, humongous run up into this sort of chop area here. And then it was just, trapped in this big trading range for, basically most of a year, well, a year. Then it broke out, false breakout, and then, it was the first one that actually peaked and started going down. And then, of course, this was a bear market. The bear market occurred in the Russell first, but interestingly enough, the Russell 2000, which I look at with the IWM ETF, it's in another one of those big. Oh, cool! I didn't realize that. So they have changed some stuff. I mean, I haven't drawn a whole bunch of stuff on the chart recently, but it's in the same sort of big box that it was in over here. Well, I shouldn't say same, but it's a similar sort of pattern here. And It's pretty interesting because it's a little bit wider now, but the thing to note is that it's approaching the very top of this box, which in theory, everything's sort of coming together right now for a bit of a pullback and or reversal. You know the um the S&P S&P's RSI is like what 75 something like that right now, 74 75 as I pointed out. The Nasdaq 100 is approaching, that the prior highs where there was a big choppy range, and the Russell 2000 now has rallied up to the top of its range, going back to, I suppose if I drag this back, I mean you could almost drag it back there, and so it's kind of interesting to see that the top of this current range coincides literally with the oh, now I'm going to struggle with this. The top of the current range literally coincides with the bottom of that big range. And so that has to be significant because I mean we're talking a year's worth of price action here, and we're talking, geez, a year's worth of price action here. And so that's significant resistance coming up here. Now, I suppose, there's some positive things you could say here, but there's all this several months of choppiness back here around the beginning of 2022, and we're kind of up into that, approaching it. But yeah, these prior highs right here. So it's going to be interesting to see how things pan out with the Russell here. So I'm looking at the RSI, which is down here below what you can see on the screen. It's just now sort of approaching 70. So the Russell's not as overbought. What's kind of weird about this is the fact that, zoom out a little bit here. So, there's like the October lows. It was kind of a double bottom in the Russell. And so there's the October lows. And as recently as the beginning of June here, it was just barely off the lows, just kind of barely. I mean, these some rallies and some pullbacks in that, but this area right here was not very far from the October lows. And so all of a sudden, this is kind of the animal spirits that we've been experiencing recently is kind of bled over into the Russell 2000 small caps, which is kind of interesting. But back to the old S&P real quick. S&P is getting very extended. This sort of rally that's going on is long in the tooth. The RSI is extended, and can they squeeze it a little bit more? Sure. So here's what I want to. Speaking of the Magnificent Seven, right? This is really the most important chart of all is Apple, right? And Apple's got a pretty interesting chart here. So we can draw a trend line, basically like a perfect trend line. So Apple going up at a 45-degree angle like this is probably the most important thing happening in the market right now out of everything. Obviously some of those other stocks have similar patterns, but this is amazing. And so what I'm thinking so goes Apple, so goes the market, right? Which, not the first time that I mentioned that. And the point I was making about the market sort of, especially the NASDAQ, just all of a sudden taking off at the beginning of the year, you can see exactly what Apple did. There's the beginning of 2023. And, prior to that, it wasn't all that pretty. It was kind of chopping around and kind of ended on a low note. And then I suppose that, and I've been saying for years that Apple's the most widely held, most important stock on the planet, right? So this to me is probably the most important thing in the market right now is, Apple holding above this rising trend line that goes all the way back to March. And I mean, quite frankly, if I extended that trend line down, it's basically, and you can see that, that there's a few little pullbacks along the way. And I wouldn't call them, I mean, dips, I suppose. A few little dips, pullbacks along the way, but you got three really good touches there. Now, if I change this to a candlestick chart, it might look a little bit different. That trend line, obviously be a little different. But so to me, this is like the most important chart and trend line in the entire market right now. And um, you can see this little pattern that we have here. Like Apple's took a little dip here recently and rallied right back up. And so of course, there's this little pattern here. Um, yeah, I mean it doesn't get more perfect than that. In theory, if Apple's able to break above these recent highs here, that could lead to sort of a little blow off top in the market, right? Now, I haven't read a whole lot about this Nasdaq rebalancing, the index rebalancing, but it's happening like between Friday and Monday. What they're doing is they're I think the stocks that I just mentioned, the handful of stocks there account for such a large weighting in the Nasdaq that they've decided to rebalance it to reduce their weighting. And so in theory, what that's going to do is that's going to, when the indexes rebalance and everything that's tied to that index reduces their weighting in the mega cap stocks, the Microsoft and Apple and I guess Nvidia and that, it's gonna have an effect. The question is, when do they actually do the rebalance? Do they do it all at once on Friday or Monday, or is it starting now? And so I don't have the answers to that question. I don't have all the details, but it's going to be pretty interesting to see to see what the effect is. Because anytime an index is rebalanced, I mean, there's probably hundreds of billions of dollars, if not trillions of dollars, that are going to have to change, that are going to have to be rebalanced along with the index. So anyway, long as Apple stays over this trend line, things should continue on pretty well. But and then you got this 50-day moving average here. The 50-day moving average is basically rising at a 45-degree angle, just, kind of following under that trend line. So first line of defense is this trend line. The next line of defense would be that 50-day moving average. But if anything happens to Apple, look out. Nvidia, same sort of thing, only when they came out with earnings, and this whole AI phenomena, right, is basically Nvidia's the poster child for the AI phenomena. And I mean, just what an incredible move here, right? So the earnings kicked it off, and this is one of those, you see this occasionally. A stock comes out with earnings. That's how you know that institutional money is really interested in the stock based on their prior earnings release, is when they come out with earnings and you get a huge gap up, and then down the road after some time goes by, it never like even gets into that gap. It just keeps going up, and you see this a lot. I mean, it's not that common, because typically you'll get like one of these big earnings pops or whatever, and maybe a little follow through, and then you'll dip back in. Sometimes you fill the gap, sometimes you dip into it or whatever, but it's kind of unusual, especially humongous market cap company like this. So this is one of the the more important companies too, but pretty amazing. Long as we're looking through these charts. Microsoft, yeah, Microsoft, just absolutely incredible. Going back to the beginning of the year, as far as trend lines go, it's kind of similar to Apple, but yeah, I suppose that's about as valid of a trend line as you can get. You got just like Apple, it's a little different here, but you got three touches of that trend line, and you have the 50-day moving average like climbing right there. And so there's what I was talking about yesterday. Um, this whole AI thing. I mean, they're talking about it on 60 Minutes. They're doing news stories on it all the time, and on the internet you're seeing AI. I saw somebody mention yesterday that AI is the new 3D printing, and I had to laugh because over the years we've seen all these fads sort of come and go, and I honestly I hadn't thought about 3D printing in probably all year, right? I mean, you guys remember, 3D printing was the big thing, and it just kind of hit me because I hadn't even thought of that. But you remember all the fads over the years that have come and gone. I mean, I can remember it's probably a decade ago where it was rare earth minerals. Like the whole market was, all about rare earth minerals, and if you watch CNBC, they talk about it all day, and it was all, rare earth minerals was like sort of the mania at the time. And geez, I've seen so many of these fads, like sort of, game changers come and go. But 3D printing was the big one. As I recall, I hadn't looked at a chart of DDD in years probably. But anyway, so, AI is the new next big thing. And quite frankly, it has the potential to be a real game changer, and everybody's kind of torn on that. And so, I mean, there's a difference. I'm not going to get into all the particulars of it because I don't know that much about it, but I have, in your Edge browser now, if you click that little Bing looking thing in the upper right corner, all of a sudden you got like this little AI thing that does some pretty cool stuff, and so it's probably here to well, it's definitely here to stay, and I'm sure that the governments and militaries have been using it for years and years and years, and they got the real AI. But the thing about it replacing jobs is kind of the interesting thing, because so many jobs are going to be in jeopardy based on AI, right? I mean, you can definitely see the writing on the wall in that. You can type into that little thing to, write a poem about something in a certain voice and it'll do it. And so consequently, I think the Hollywood, the actor strike and the writer strike or whatever, I think that's one of their big concerns is that AI is going to take their jobs. So, but I mean, there's a lot to it because AI is definitely something that seems like it's not going away now. But the big question is, whether it's going to be the sort of game changer that they're saying it will, and it probably will. Just if you think it through, AI. But then again, like any one of these, like the .com bubble. Speaking of AI, so here's one of the favorite sort of let's zoom back on this. It's interesting to see something like this because I don't remember hearing much about this, back in 2020 when this thing IPO'd and all that, but you can see that it basically got caught up in the same sort of, .com manias, like, the whole pandemic thing where like Zoom and all these sort of internet companies or whatever were just going crazy. Um, with the lockdowns and the pandemic and all that. And then, when things started normalizing, it was like a .com bust. So anyway, this is actually kind of an interesting chart. So speaking of which, whoop, sometimes I just typed the wrong symbol in. Speaking of which, here's where you can really sort of visualize the animal spirits coming back, right? Is ARK. So there we go. I always like to go back to the prior high here. ARK peaked well before the overall market did, and this is something. This is really something here. I mean, it had really nice sort of bottoming looking pattern to it, all year, and then it's finally starting to emerge here, and so. But look at like this latest sort of run here, right? And by the way, the RSI on this is extremely extended. It's getting back to, around a year ago, it had rallied up off the lows, made like an interim high here, and then of course, made another low into the new year. So something odd happened at the beginning of 2023 and it has to be calendar based. I mean, because look at the price action, towards the end of last year, and then all of a sudden at the beginning of the year, you can just see it. It just went from 30 to 40 just straight away, boom, in January, and so kind of interesting. And then obviously you can see on the chart what it's done here. That was just it was kind of there was kind of a nice pattern to all this, and it did look like a bottoming pattern, obviously but and here we are. And so this latest little rise here seems like it's a little bit overdone, a little bit extended in that. And so, you can see plenty of other spots on the chart where you had like these tremendous rallies and then gave it back. So I don't know. I mean, I think that we looked at Microsoft. Let's look at Tesla. So much talk lately about electric cars. Tesla's, is phenomenal too. People they either love or hate Tesla. I'm not really, I don't really have much of an opinion on it, but I saw something on the news, NBC nightly news last night about how China's all these electric is really the leader in the global electric car market. They had some pretty nice looking electric cars. But obviously they don't sell them in the U.S. because, as they said on the news, there's a 25% tariff on Chinese electric cars. But man, everything seems like it's going to electric cars. Although I'm really torn on them. I mean, if you do a little research and you look at them, and I'm sure you've seen the stories where they're worse for the environment. The batteries are the problem, and so the batteries themselves are worse for the environment than just having a regular old combustion engine, right? In theory, and I know everybody's read that. And then there's the whole problem. I did see something where the batteries have a certain lifespan, and then it costs like I mean, it's basically like buying a new car just to get the battery replaced. So I don't have any desire to have an electric car, to be honest with you, but it's definitely the wave of the future. I think, I honestly think that hybrid's probably a better bet than a fully electric car. But anyway, here's another example of how at the beginning of 2023 the money just all of a sudden the spigot opened up and they started buying these beat down. I mean, look at the sell down from the beginning of December of last year, right? Tesla was at $200 and it traded down to like almost 100, so it lost half its value in 1 month. And then all of a sudden at the beginning of 2023, boom, it doubled. They bid it up, and then it meandered around for a while, and now it's back in bull mode. And so just absolutely incredible. I mean the market cap changes in these companies is just insane. That's what really sort of gets me is like you see, it's one thing for the price to do something, but the market cap fluctuations in these mega cap stocks are just something to behold. So, and of course, the ones that I mentioned, the Magnificent Seven. So, I've read stories about the old Nifty 50 back in Nifty 50 back in, I guess it was the 70s or something like that. I wasn't around in the market, but there was 50 stocks that were holding up the whole market or whatever, and now it's like 7. So that's kind of crazy, but anyway. So Google's got it just doesn't seem to be as doing quite as well as the other ones. It's kind of stuck here, but it did have this consolidation and broke out of it. So this is kind of an interesting pattern. I guess the earnings are going to be. Quite frankly, I can't understand. I never have understood how Google makes so much money with their silly Google ads because I never see them. Well, I use an ad blocker, so I don't even see them. But I mean, when I search Google, the last thing I want to click on is an ad. Be honest with you, and I mean, people hate internet ads, and for as many years as I can remember, I have used an ad blocker because I mean that's the only way to using an ad blocker is the only way to stay safe on the internet these days, right? And I read so much stuff about scam ads on Google and and viruses that people get because they show up in Google ads and that. So even back years ago when I didn't use it before I used ad blockers, I would still avoid Google ads like the plague for the most part. So I'm telling you, and I'm a computer internet guy. I'm on the internet all day, every day, and have been for, decades. And I've probably clicked one Google ad in the last 20 years. And so I don't get that, but of course they're into all sorts of stuff. But basically, people paying them for these ads is that's their bread and butter, and I've never quite understood it because anybody can get an ad blocker for free, right? That blocks those Google ads, and I just don't see people clicking Google ads. I really don't see and certain certain things that I do they pop up or whatever, and I just they're annoying. They really are. So I don't get it. I've never liked internet advertising to begin with. So anyways, so I guess we've looked at most of them. What NFLX? I wasn't paying attention. So last but not least, we've looked at most of the Magnificent Seven. So might as well look at Netflix here. Same thing with Netflix. Kind of a weird little pattern, at the end of last year, whatever. But basically, a lot of these stocks, if calendar based buying, it almost seems like at the beginning of 2023. Well, of course, last year was a tough year in the market, and so um, it wouldn't surprise me if a lot of maybe some AI said, hey, after a down year, you want the next year's is almost certainly going to be up, and so you want to buy. So everybody just started buying at the beginning of the year. I don't know. Anyway, yeah, I'm really surprised to see, and there's a lot of weird stuff going on too in the market. I mean, there's almost like like throw the fundamentals out the window type environment is what we're in right now. Um, and so it's going to be interesting to see how it all sort of pans out. But this doesn't make any sense to me, especially this last rally here, because um, boy, I'll tell you what. I mean, Netflix seems like it's kind of gone downhill. I mean, I've subscribed to Netflix for years, and I'm getting kind of annoyed with it because they're not coming out with anything new that's good and worth watching. So I'm like, all of a sudden, when I'm looking for something new to watch, I'm over, finding stuff on Apple TV. So anyway, so keep in mind that the market's extremely overextended. There's going to be a rebalancing between Friday and Monday of the NASDAQ 100. Um, it's impossible, it feels like we're sort of in like a short squeeze blow off top type of thing. And in theory, when you get in, I've seen these type of environments so many times over the years. You get into this type of thing, and every little dip is getting bought. There's a lot of FOMO, fear of missing out in the markets, and that. So it's kind of a recipe for disaster. And then you got the Fed. The Fed's going to hike again in July, which I guess is a couple weeks away. It's not. It's next week. Yeah, next week's Fed meeting or whatever. They're expected to hike, and then depending on depending on whether they say that that's basically it, or whether they're going to continue to hike. So there couldn't be too many more rate hikes priced in. But interestingly enough, I saw somewhere where commodities were the price of like grain and wheat and stuff has been rallying big time, and so if inflation starts to re-emerge, and that's another big debate that I think is going to affect what happens going forward, because inflation's been coming down and coming down, and the CPI year over year has been coming down, and according to some authors that I read, it's about to bottom out and start trending back up. In which case, you're going to have 5.5% interest rates, and then inflation like coming back, right? And then of course there's a debate about whether there's going to be a recession or not. So lots of crazy stuff going on, but I personally, this seems to me like a good time to be cashing in some gains, not get too greedy, and sort of let the dust settle. Wait for some sort of at least a reasonable pullback, um, to manifest. So that's what I'd be doing. It seems to me that the smart money would be taking profits after the kind of runs that we've seen. And of course, you can get almost 5% in safe money. So, last chart I want to look at is AT&T. Yeah, I never even look at this chart, but I mean, it just got taken to the cleaners here. Remember when AT&T used to be like one of the blue chip stocks, right? And I guess the question is, can they maintain their crazy dividend or whatever? But that's something. So, I mean, this sell-off in AT&T, it was like at a multi-year low. We switched to a monthly chart here. Yeah, look at that. Wowzers. That's incredible. But there's always you see a chart like this, there's some symmetry to this chart, right? So look at the other times where it had these spikes down here or whatever, $15 or whatever, and boom, within this is a monthly chart. Within a few months, they sent it back up a little bit. But I mean, look at this range. I mean, what's incredible about this is that you go back a decade, like if other than the dividend, right? And so, I guess if you bought this a decade ago, you got some pretty good dividends, but you didn't get, if you were still holding it, you didn't get much price appreciation. So this is actually a good chart to kind of study, because it differentiates, the behavior of certain individual stocks. Nothing, worse than being a buyer and holder of a stock that goes nowhere for 10 years. But somewhere out there, there's actually a dividend adjusted chart of this that I'd be interested to see. So anyway, I've taken up my time here. So lots of interesting stuff going on, and I will catch you back here, same time, same place next week.